Another thing is on the balance sheet, there's a debate on the balance sheet is the value of the assets. So, for example, let's say if I purchase the building, not just building, if I have a building on my balance sheet, how do you evaluate? How do I put the value of the building on my balance sheet? That's also another important debate for the balance sheet. So the rule we have is if the assets have a market value, we will use the market value for the value on the balance sheet, particularly for the stocks or the stuff. But sometimes there's some assets we don't have value. So for example, I have very unique building. The building has no market value because there's no trade on the building. So how we do so? So in that case, what we do is you have to find a building which is similar to the building you have on your book, and then you find the price of that similar building and use the price of similar building as your value. That's another way you can evaluate your assets. And the third way, if you, let's say if I have a building, the building is completely unique. You cannot even find any similar building in the neighborhood. What do? And then you will calculate, you will assume you rent out the building. If you rent out the building, you have the cash flow, you have the rent income. And you estimate all the rent income. What do? You discount all the rent income back to the present. You can get the present value of the rent income. That will be the value of the building. Okay, so this is something you should understand. Sometimes how the value of the assets are determined on the balance sheet, and there's a it's a hierarchy measurement. When I say hierarchy measurement, means if the assets have a price, use the price. For example, stocks. For example, bonds. All these stocks. You use the price. You use the price of the assets on your balance sheet. That's the first option. If you don't have a price, what do? You get the similar assets, price of similar assets, and use that as the value on the balance sheet. If you don't have a similar assets, what do? You estimate the future cash flow generated from the assets, and you discount all the future cash flow into present, and you get the present value of all the future cash flow the asset generated, and then use that as the value of the assets. That's the way we estimate the fair value of the assets. That's how we estimate the fair value of assets. So you can be aware of that. So this is sometimes you can understand. I want you guys to understand the balance sheet better, so you will be able to use the data to help investors and the managers. Sometimes you have another option. You have a fourth option. The fourth option is you use historical purchase price. For the value of assets. That's option two. Okay, so sometimes there's rules, just which one, when you use which options, there's some rules on that. Most of the time it depends on the type of assets. If the assets are tradable on the market, normally we use the price. If the assets are not tradable on the market, normally we just use historical purchase price or estimation of the future cash flow. This is how we understanding the value of the assets on balance sheet. And